passed through our regulatory sandbox. But perhaps maybe to coin this, it is about collaboration, working together, agreeing that we have different roles to play, and of course, respecting the requirements which are in the law. I want to say, I think we've seen a very good will from government when we have asked for certain things on behalf of the market. I think the government has been very responsive. So as a regulator, surely I can go on and on. And John, for your information, our peer markets are here. As we speak, we are hosting so many of our peer markets here just to see how we are doing what we are doing, because as you mentioned, the problems we went through sometimes were not just peculiar to Kenya. I think they hit nearly everybody. And we can see our market is now active. So others are also learning from us. But I think we will be looking more into regional kind of discussions and racings, which will even make our markets more better. Let me stop at that.
Thanks, Wycliffe. And I must commend you and the CMA for the work that you're doing, the good work that you're doing, because the NSE wouldn't be able to move as quickly as it is, come up with these innovations without the support of yourself. So it's a good tag team. You've mentioned that your peer markets are here, and I had a thought and a follow-up question around this. Who do we consider as our peer markets? Is it regional peer markets, or are we being a bit aspirational and saying our peer market is Singapore, so to speak?
Yes.
Singapore is the buzzword of the day.
Yes,
or the US or the UK.
Yes, and that's a good question, because it depends on how you define peer. So in terms of competition, of course, we look at the big markets. They have what we should have, and therefore we look at markets like India, which largely, I think they are nearly where we are, but very active because of certain other aspects, population, and so many other technology. Of course, we'll have Malaysia, we'll have US, and we do a lot of work with the UK. So, and other European countries, Australia and others. So when you look at it in terms of operations, I think you then look at the big markets. But as well, we also want the regional jurisdictions to have their own active markets. So you realize we have supported many markets. And of course, if you, go all the markets within the ESC, we have lent them a hand. And as we speak, currently, I know, Burundi launched its market just early December. Their team has been around. And of course, we keep on trying to see how we support them, because they have to come to a point where we can say then they are able to do certain things. So it depends on how you want to look at it. But ours is just to share what we have, so that those who are coming up, they don't make the same mistakes which we made when we were trying to create our market.
Good. Thank you for that. I want to shift direction a bit and talk about valuations. And anyone who knows me knows this is a passion of mine. It's what I do day to day. But also, I think with the recent activity in the market, it's become quite topical, particularly around some of the more recent issuances, as well as transactions that are in progress. And we know that valuations, are a key determinant of successful listings, as well as just trading activity in the market, right? And more specifically, the KPC listing, to put you on the spot here, and this I'll direct to you, Bryan. That's generated a lot of debate around the pricing. So two questions. So one is what is the NSE doing to ensure that pricing for your issuances are indicative of fair value, while still making the stocks attractive to potential buyers? And then if this was to sort of be a pitching call for KPC, what would you say to the detractors who are saying, it might be a bit overpriced? Why should they buy?
Yeah, thanks. Thanks, John. So the first thing I'll say for that is that debate is good, regardless of how you put it. And I've enjoyed it more than most because you see now when you just go online, at least there's something people are talking about. By the time you're telling them about other matters to do with stock markets, there's already something on the table that you're discussing. But on KPC, let me just say this. Generally speaking, as capital markets players and where NSE sits, you see, for us, we tend to prefer to take a neutral route in the sense that pricing on the market is informed by the buyers and sellers of security. We are just a platform where that buying and selling can be done. So the view is really we shouldn't even be an authority on valuation, because if someone is looking to buy a certain item at a certain point and it's a willing buyer, willing seller engagement, let the transaction take place. But most importantly, I saw a research report the other week by one of the investment banks, and I liked the heading. The heading read something along the lines of value lies in the eyes of the beholder. And they had gone through some metrics. I mean, obviously, the big debate is to do with the multiples that are at play, not necessarily on the intrinsic. Okay, on the intrinsic side, maybe the debate is not that much, although there's still conversations around that. But it's around the comparables and the multiples that have been used to inform the decision. Honestly, from our point of view, is at the end of the day, as long as for the actual IM, when it was submitted to ourselves, because it was in adherence to the general tools usually used for valuation, we were generally okay with it. To the extent that yes, you would then let the market decide. I wouldn't want to market them because I'd prefer to take a neutral stance. But the only thing I can say is that as much as PE has been in the forefront of late, I mean, even PE itself, by virtue of it's usually not a like for like comparables at all points in time. Obviously, there are elements to do with growth and that are embedded within the company. And those always have to be at consideration. Now, how much of a consideration is that? I guess it depends. At the end of the day, valuation will always end up being a subjective element, because you have to put you have to contextualize the numbers and the assumptions that you're using. But maybe people can also, have a look in that sense of form. And, at the end of the day, you are buying a company for what it can be. You're buying into the future proceeds of it, not necessarily what it has already done. So, how people choose to forecast and the assumptions that you use and the discount rates that you use, that will always have a level of subjectivity, but, people can be a bit optimistic in my view.
Thanks for that, Bryan. Wycliffe, I'd like to get your view on the same. But for you, I'll, in addition to just the standard valuation conversation, for you as a regulator, how do you ensure, the pricing and disclosures and around the same, and shareholder protections are not only fair and transparent, but also, benchmark to sort of international best practice and international standards?
Okay. Thank you, John. And I want to speak to this because it's a question that keeps on coming. As you rightly mentioned, capital markets regulators, we set standards under IOSCO. And valuation has always been a very interesting discussion. But we have agreed that regulators must not set prices, especially in cases where we have listings. But this becomes a professional discussion based on information which is available. But the role of regulators is to look at what are the disclosures, what are the assumptions, and of course, what is then the basis, which methods, And then, of course, from there, how was the offer price determined? Because there is always a confusion between valuation and offer price. Valuation guides what then the offer price becomes. There will be many other factors. In most jurisdictions, you don't want the regulator determining because, one, you don't have the information. And even before the documentations are prepared, you don't have access. So this is left to the issuer and the professional team who are in the transaction, of course, team. Now, let me speak to the particular one which you seem to have highlighted, and of course, the discussions which are ongoing around, the price. And remember, I've spoken about valuation and offer price. They could be very different things. You can value a car 6 million, and then you sell someone at 2. Of course, you have agreed. So I think where it stands, this is what should then dictate what the price is. But in the process of assessment of the documents which were made available to us, there was an argument for certain methods which were used, and of course the assumptions which were then, of course, observed. And then you know very well there will be the averaging of the resultant valuation figures. Then, of course, you arrive at a value which looks fair from the valuation methods which have been used. Then from there is a question of other factors. Are we doing it at discount, or are we doing it at a premium, or is it flat? Now, from the documentations which have been approved, in fact, if you look at the average which was given, there is a slight discount. But anyway, these are professional figures which are calculated based on certain assumptions. So you and me could still have different figures, but the question is, do you have the same information the company has, the issuer, and the team which is working on this particular assignment? There is a push that the regulator must set a ceiling. In most cases, it doesn't work well because we want two investors to interact. The one who has money and the one who is looking for money without much external interferences. But then what I agree on is for us to agree. So how do we want to conduct valuations so that we minimize these questions? Of course, these questions will be there. We are seeking for professionals like yourselves, those who are qualified in this specific field, maybe to take this issue, and then we agree. We know we license those who do valuations, but it's an area which calls for professional exercise, and therefore your role as CFS, I think, is very important, and this is one of the areas we should work on. And I know even within IOSCO, valuation is quite a very fluid discussion. We have been summoned sometimes before our houses and they have asked, so what is your control? When we give this response, sometimes it doesn't go well because I think the expectation is this was wrong and therefore it should have been done in this way. Perhaps maybe we need to engage as stakeholders on this issue, especially professionals, so that we agree on how best. But then let me speak to what Bryan said. There is the very professional work you'll do, but the market will assess you. So, well, we may say 9 shillings is a lot, But you may be surprised, maybe when this share hits the market, it goes to, say, 15 shillings. Sometimes the fundamentals may not be the only. There are certain things that you may not see, which other investors see. So I like the discussion which is there, but I think we need to all agree, how do we address this issue so that there is trust in some of the figures that we see.
Thank you for that, Wycliffe. And you mentioned something
John,
quite...
John, before, and then I
Yes.
have just described the circumstance which we find ourselves in. But as far as we are concerned, we insist on specific documents to be available for inspection. So you as an investor, perhaps if you are not very sure, the issuer is required to make available specific information for inspection. We also insist on minimum disclosures within the IM so that as you read, you understand this was their thinking. But if you wanted to see the evaluation report, it is also available for inspection. Those are regulatory requirements which are in place. Thank you.
Okay. So you're saying the valuation report is available to the public?
Exactly, it is.
Okay. Okay, good. I know we have upwards of 60 participants on the call, so you've heard it here. You've also mentioned, I think, something quite important to know when talking about valuations and performing valuations as well. Obviously, there's the fundamentals and the quantitative aspect, but there's the qualitative aspect as well, which you can't really put a number to. And oftentimes that's the difference between fundamental fair value and a price. So that's quite important. But also you've said there's a potential role here for CFA charter holders, and obviously this is a CFA society webinar, because I know in some markets they actually regulate some activities that you need to have a certain qualification to be able to do. And CFA is one of them in one of those markets. So that's a potential area of engagement between us and yourself. Shifting gears again, let's sort of, but sticking to you, Wycliffe, talking about sort of what regulatory moves and regulatory reforms are on the horizon to ensure, both sets of investors, institutional, retail, that Kenya markets are safe, transparent, fair, globally competitive.
Thank you. And by the way, what we are doing is one of those. We need to speak to people so that they understand the structures which are in place. We have a very robust regulation, let me say, framework or frameworks that govern investors who participate in our market. And as a country, fairly, in terms of enforcement, we are very firm. So where investor rights have been abused, we run very robust enforcement programs just to ensure what is within the law is then always is adhered to. And of course, if there are losses to investors, we try to find ways of ensuring the loss is minimized. So there will be compliance processes, there will be enforcement processes. We have in place self-regulatory frameworks, NSE being one of the SROs that has specific delegated powers to do certain things, just to ensure as first-line regulators, things don't go way off, especially when it comes to their members. I think when you look at if an investor suffered losses, there are cases where we run a fund, investor compensation fund, which will come in when investors have suffered losses, especially where our trading members, especially the brokers and investment banks, have had an issue. And of course, we know the maximum you can draw as an investor is up to 200,000 Kenya shillings. Of course, we see other authorities increasing, and it is a debate which we need to have. But when I spoke about enforcement processes, you may not know, within the CMA, we have a police unit, DCI, which deals with criminal aspects, especially, of course, as investors interact. But again, I think we have invested much in technology. So you find most of our programs with those we interact with have been automated in most cases, just so that we are more efficient. And one of the areas that comes with a lot of exposure is the gatekeeping. This is licensing and approval. That section has now fully been automated, and it's easier. So we are more efficient just to ensure we serve the publics which are within where we are. And I said, where we sit, investor education, sensitization is the best way to protect investors, because if you are aware of your rights as an investor, your decisions may not really expose yourselves. We and other stakeholders, NSE, CDSC, and others, we work jointly to ensure we run specific programs. We have apps, and we are very clear on who are our licensed persons, members, and the public maybe can access this information very easily. I think perhaps if you look at it, even from what we have seen, our market is safe. Of course, we have had issues around crypto, and now I'm happy we have legislation. And of course, very soon we may have regulations which implement that piece of act, so that we can protect ourselves, our investors, even much more. Around issues of money laundering, I think we are working on structures just to ensure, as it is required by FATF, there are measures which are robust, so that we also don't abuse the financial system within the country. But overall, as CMA, we have capacity to ensure investors are protected.
Thank you for that. Bryan, if I can move to you now, and I think you touched a bit on it earlier, but if we look at sort of what the innovation and access that the NSE is looking to increase, innovation around products, we're seeing Islamic finance products, alternative bonds, derivatives, REITs as well coming online. So these have been introduced into the market, but we're seeing that the uptake is a bit limited. How do these alternative products fit into the NSE's long-term strategy to revitalize the market? And what is the NSE doing to increase appetite and uptake and access to these instruments? So if you can talk about the innovation side of it and the access side of it as well.
Yeah, so thank you for that. Actually, holistically at NSE, we have our strategy, and our goal is to not only be able to entice listed companies, listed shares, but also the innovative products. So the funds, the alternative products, REITs, funds, ETFs, and such. And this actually is because those products offer a better entry point to a retail investor than direct equities. I mean, a market like US has more ETFs than actual equity securities, And when you look at how households generally invest in developed markets, even not only that, even when people track the performance of the NSE, people usually track the performance of the NSE All Share Index. Now, if there was an ETF that would be tracking that, then it means that people will be using that as a good benchmark, and you will be investing in it directly, because it's also very bulky to invest in all 61, 660, 63 stocks. So the motivation for the alternative products is because they actually will make it easier for the user journey, particularly for passive investment instruments. So the innovation around that is, okay, so how can we are starting to see some very innovative structuring towards it. NSE has been an active player on the associations that are affiliated with these particular products. So for instance, there's an association that tracks REITs in particular, called the REITs Association of Kenya here. NSE, where we are a key member, we contribute a lot of data and research and also policy advocacy. So right now, the REITs regulations by CMA are under public review, and we have delivered a lot of thoughts and findings to that on some of the frictions that we saw before, so that future ones can be a bit better. So there's a lot of advocacy work, so to say, that we are doing on that. For ETFs, it's more about market awareness. I'm not sure how many people know, but just last 2 weeks ago, Dar es Salaam launched an ETF, or rather an ETF was launched on the Dar es Salaam Stock Exchange that tracks top East African stocks. And it has stocks around Kenya, Tanzania, Rwanda, and Uganda. Now, first of all, who can come up with such a product? It's the fund managers in our market. I'm sure a number of them are part of the CFA society. So perhaps the appeal here will be to say, listen, as NSE, we are happy to work with any intermediary. If you are seeking to set up such an instrument, we are happy to lend our support as part of business development, if that product ends up being a product that is listed on the exchange, because we see no reason why and someone can't just come up with a passive instrument that tracks at least the most liquid stocks. We at NSE, we even introduced the NSE Banking Index last year in the hope that so you see, we can't ourselves be a promoters to an ETF. But, because we are now providing the data and the reference points, now this is the sort of information where, perhaps your members can come up and say, listen, we'll set up a fund, passively investing, and this is what we're offering to the members of the public. So we are happy to support in such initiatives. With regards to market awareness and assessment, interestingly enough, REITs are considered an alternative investment. But if you just go outside Kenya, real estate is not, in fact, people are more likely to understand real estate than they are to understand stocks, especially for your retail person. So in their minds, this is sort of an easier, we tend to think these will tend to be an easy understanding because of some of the key clauses that are within REITs, such as the clauses on distributions, clauses on trading, and things like that. So obviously maybe it's because we give them hard names, those REITs, ETFs, they sound like big animals, but we think that they are more easier to understand than traditional equities, and debt is very easy to understand. And education will still keep on going, and perhaps the promise you can make is that if any of your personnel are interested in pursuing such, we're here to help.
Good. I think staying on the innovation sort of topic and market access as well. I know that there was an app. I know we've mentioned the ZD app that you said has soft launched but official launch next week.
Yeah.
Just confirm that we can use it now.
Yes, you can use it now. Now the market is closed. Yeah, right now the market is closed, but on Monday, when the market opens, you can create an account now and you can start buying shares Monday 9 a.m.
Monday. Okay, so it's live.
It's live.
And then I know there's another app that you launched, and I think we were, as the CFA Society, we were involved in that. I think you gave training around that, called the Soko Play app. Can you talk about that a bit? How is it different from ZD?
Yeah, the short answer is that Soko Play ZD is real money. Money actually moves from your M-Pesa to and fro with ZD, so it's your actual cash. Soko Play is more a testing ground. Even if you see how people get into Forex, for lack of a better example, there's usually a platform somewhere where you can put some dummy funds to see how your trades might go. And so that's what Soko Play is, because Soko Play, what it is, it says that particularly for students and people who want to test out price in stock markets, the data that is on Soko Play is actual live market data, right? So it's a live market data, but you're given a dummy account where you can just place trades and see, assuming you had done this, how would it have moved? So that's the learning ground, and ZD is it's the real play.
ZD is the big brother. It's real life.
It's live.
It's real life. Okay,
Yeah.
Understood. Okay, so now going back to you, Wycliffe. If we think about sort of listings and IPOs, I mean, we mentioned earlier it's been a thin pipeline, but obviously we're witnessing increased activity and increased interest from issuers. Over and above what you've spoken about, what other incentives and policy shifts is the CMA thinking about to attract high quality issuers, including large regional companies and multinationals?
Okay, so we keep on putting proposals to the government through the National Treasury and economic planning, especially around issues of tax. If you remember, I think most of the incentives which we had were clawed back in 2020, and we have revisited some of them because we feel perhaps they will be very useful, because there is always anticipation of a benefit in terms of perhaps even financial sense if you list. So we keep on engaging the Nation Treasury and the policymakers just to see what extra we can get. By the way, I think we do this jointly as a market. And as I said, of course, there is the sense of, look, we sit together and we agree this must be something that we must get from government. So there are some which are still under discussion, and we hope maybe we may push some as we look forward during the budget speech. But more particularly, I think, to be honest, we are very facilitative. So the regulations are there, and sometimes ours is to see how those who are interested in raising money, and also, of course, those who want to list, of course, you can list without raising money, are facilitated so that either they raise money or, of course, they can list with ease. And we, of course, look at exemptions where perhaps maybe a few requirements can't be met, and there are proper explanations for those, so that we can see more people, more companies who want to raise money do that. I can tell you it's just how we approach and sell this segment to people, because now we see the macroeconomics being where they are. Look, before, the government used to give investors 18% on the government paper. So it was very difficult for investors who had money to think of other investments. But now, having that, this rate has gone 11, 12, 10, and even shorter, I think it has opened most investors to see maybe there could be better opportunities even within the private sector. So ours is how we get this information out there so that those who are looking for funds can then explore using the market, because at the end of the day, the capital they raise here is more patient and it is usually cheaper. By the way, if you look at, for example, the current issues that we have seen, or the one which is going on, if you look at it and look at perhaps maybe how much is being raised, the costs, and of course you can factor in the compliance costs you spoke about, they assume they went for a loan where they are paying interest monthly, annually for a number of years. In aggregate, of course, the cost in capital markets is lower. So it is how we sell this proposal to those who are raising funds. But again, I spoke about how we automate most of the platforms so that it's easier and convenient for those. Because when you look at it in terms of regulations, we have handled that side. But of course, we are willing and we are ready in case there are specific areas maybe investors will want us to revisit. We are willing to do that.
Okay. Thank you for that. I see there's a couple of questions coming in the chat. So we are just about to wrap up and then go into the Q&A session. So far we've talked about where the capital markets has been and where it is now. So I want to sort of shift and take a more forward-looking view, and just to get your thoughts as the NSE and the CMA. And I'll start with you, Bryan. So if you had a crystal ball, if you could predict the future, and it was a future that you would want, let's say 3 years from now, 3 to 5, what would success look like for the Kenya capital markets in terms of depth, breadth, and investor trust? And Wycliffe, I'll pose the same one to you as well. But if we can get the NSE's thoughts first.
Yeah, thanks. And I think the forecasting is usually a very interesting activity. But I'll leverage a bit into what we are working towards as NSE, because if we actually achieve our strategy and those goals that we have in it, that's what we ideally would want to see. So in the next 3, 4, 5 years, 3 to 4 years, let's say, first of all, success is enhancing retail participation in our own capital markets. Right now, you've seen the rise in collective investment schemes, right? So as of the last report, I believe in September, the collective investment schemes were at near 700 billion in assets under management, which is a very big thing for the capital markets. So it clearly shows, and the collective investment schemes are fully retail. So it shows that a segment that has maybe previously been often ignored has quite a bit of market depth and liquidity into it. If some of these was able, and I know CISs invest in the markets in any case, so it's the retail investors have an indirect access. But if you're able to enhance a lot of that and also be able to open the doors for retail people, for wealth creation, because at the end of the day, that's a very core purpose of capital markets to any economy, wealth creation for shared by all. So if we're able to increase the number of retail participants, the target we are going for is to get to 9 million. I know it's a big number. If we get to that, we'll be very pleased. But also, once you have this capital, because we are all about linking access to capital to people who need capital, we'll be very pleased if we'd have a lot of quality issuances. And it's usually a chicken and egg thing, because if you engage with some of the issuers on why they haven't come to market, particularly private equity funds who we have had continuous engagements with, there are always questions about market depth and liquidity. So now that we have actual IPOs happening, it will be quite interesting, because I know that has been the reason that has been cited in many PE circles. The market is not liquid enough to accommodate large transactions, but I beg to differ. And some of these transactions that we'll see, some of the figures might surprise people. But once we have this market depth and people coming in, then it becomes easier to get good quality exits from PEs, but also good quality companies just coming to tap into this capital, so that we can be a good conduit of safe wealth creation in the economy. So if we can manage to have more of these core companies coming in, and most importantly, they have other products that help in risk mitigation. So as was earlier mentioned, the derivatives market has been increasing quite a bit. And the way we look at that product is that it then becomes a very good tool for investor maximizing returns, but also mitigating downside risk through some of the options that we'll also introduce. So if we can get also participation on that front, because the derivatives market has an opportunity to not only do that on the equity side, but also to unlock the commodities and agriculture space, which we know the Kenyan economy is quite heavy on agriculture. And in developed markets, particularly SA, we've seen the use of derivatives to actually advance good capital towards that ends up in agriculture and then spurring the economy. So at the end of the day, we hope all these things come together, equitable wealth creation in a safe way, good quality instruments, but also that sophistication and increase into sophistication where people are using even more advanced products for risk management.
Thanks for that. And I know we have a lot of PEVC, investment holding, charter holders and members. So when you tell them that, the NSC or the capital market will provide a good exit avenue for them and for the investments, I know that's music to their ears. Bwana Wycliffe, your views.
Yeah, thanks. And I look at it in terms of primary market and also secondary markets. Of course, our ultimate objective is to have a deep and efficient market where investors can raise money. Those who want to invest can invest in investments which give them high returns. And of course, as they raise this, the cost is manageable, low. And by the way, I'll be very pleased to see how our market influences our neighboring markets so that we grow into some kind of a regional market. It could be ESC, but I see there are many who are interested to join who are not within ESC, or we've seen Ethiopia and maybe others who are not currently ESC. We need to see how our market influences the rest of these others so that we have a huge regional market, so that there is variety, there is breadth, and we can raise money. But more so, if you look at the interests which we put when Nairobi International Financial Center was being coined, we should be the regional center hub where anybody can come and raise money. We should be a gateway to most of the African regions where perhaps maybe, we make it easier for people to access funds because we have the capacity to do that. On the secondary market, again, there are very nice sentiments that we hear from, of course, those who influence trends about Kenya. I really love to see us being the market of choice, especially for internationals. I know as we speak now, our local participation has gone up 60%. Sometimes it goes beyond 60%, which is a good thing because we have local capacity to take. And therefore, when there is capital flight, we then reduce the impact which has brought down the valuation of our listed assets. I'll be very happy to see our market capitalization grow by a number of trillions. And by the way, for the first time, we've crossed the 3 trillion mark. And I believe, and from the signals we see, after we list a few of those that are available and we can see the pipeline, we could go even higher in terms of market cap. But for me as a regulator, just ensuring there is investor protection. People believe in our systems because we work on these systems. I think it will really mean a lot to us.
Thank you, Wycliffe. So you're saying in terms of market cap, Vision Singapore is not far-fetched, huh? We can do it.
I can tell you, do you know how many billions Kenya pipeline can bring if we subscribed fully? And I know because I see the pipeline where I'm sitting. So for me, I see it is possible, and I think we need to remain very positive.
Okay. Good. Last question before we jump into the Q&A, and this one I'll give you, Wycliffe, a parting shot. Obviously this is a CFA society call. There's a lot of people here who are either members, but it's open to the public as well. So we have aspiring members, aspiring investment professionals, whether or not they are, CFAs and charter holders. So my question is, how can investment professionals, CFA charter holders or members and otherwise, be mobilized to be ambassadors of integrity and confidence in the capital markets?
Thank you so much. And sometimes when we have this question, sometimes I'm envious of Uganda. I think the work you do with your members in Uganda just to creating awareness is awesome. We will need to see that here. And we are open actually to have those discussions. Look, when we have discussions around valuation, this is where you apply your knowledge. You need to be on the table and even give ways of us addressing some of the questions we are going through. So you did mention in some markets, perhaps for you to do valuations, perhaps maybe there is insistence that you need to have some of these papers. We need to have a discussion. Where we sit, we intentionally introduced a license for one person, a company owned by one person, investor advisor. And we believe if most of your members became advisors, I think this will reach our aspirations, what we preach will reach most of the other people. Perhaps we need to have a discussion on what have been the obstacles, because for this particular license, most of the requirements were removed because it was meant to be for individuals. But more so for me, if we can leverage on your knowledge to create capacity, and this can be done, and I think this is what most of your members do, I think we need to engage. Because there are opportunities here for you as professionals and for us also as markets to benefit from the knowledge which your members have. So what am I saying? We are ready to have engagements. Listen to you. What are your ideas? And of course, we agree on certain things that we can do together. Thank you.
Perfect. I know that is music to the ears of myself and my team at the Society, and we will definitely take you up on that and engage and see how we can, more formalize these things and regularize them, just to make sure that the integrity of the markets are maintained at a high level by having the right skills doing the right things. At this stage, I'd like to thank you both, Bryan and Wycliffe, for your candid views and insights so far. As we move into the Q&A session, I know we were scheduled to finish in about 10 minutes, so running a bit behind on time. We will try and answer, those that are, sort of the more key ones, but we won't shy away from any controversy. Anyone who knows me knows that I won't. So I'll pose the questions, and then, if it's directed to someone specific, they can take it. Otherwise, if it's open, it's open to both Bryan and Wycliffe as well. So I'll start with, let me just have a look. Let me get the easy ones out the way first. There's a question for you, Wycliffe, just around the information around the KPC listing. There's a question asking, where the valuation report can be found. If it is indeed available, perhaps you can direct the person asking the question to where it can be found. Yeah, perhaps you can take 3 at a time for each of you, and then answer, and then take another 3. This one perhaps I think is for you, Bryan. It's around the ZD app. Someone is asking, do you need to move your CDS account from your current broker to ZD in order to start trading on it? And then another one on the CDS to Bryan as well. A listener is saying that they submitted their papers to open a CDS account in December, and they haven't gotten a response to date. What would be your advice on this issue, considering that an investor cannot open more than one account? There's a question for you, Wycliffe, and the CMA. How is the CMA balancing investor protection with market development, especially in a low liquidity environment? I think we touched on that during our chat, but you can briefly respond to this listener there. Okay, there's also a question for you, Bryan, around the cost of listing. So it says, you're quoted here that you mentioned that the cost of listing is comparable to the cost of raising funds privately. What does that look like in terms of percentage of funds raised? I don't know if you have the data on hand to speak on that. And then one last one for this round for you, Wycliffe, would be, what is the turnaround time for new products going through the regulatory sandbox and the stages from application to approval by the CMA? So we can start with those and then take another round before we close.
Okay, I can start. Okay,
Go ahead.
thank you. So on the first one, on the ZD app, and whether you're required to move your CDS account, the short answer is no, you're not required to. So how the ZD app is structured is such that Safaricom itself has opened a CDSE account. So any investor going through Safaricom, it will appear as if it's the Safaricom CDSE account buying the underlying securities. So that's what is referred to as the omnibus account, where you have one master CDS account. Then so this is just like a platform where orders are coming through, and then these orders come to the market. Now, what that means is that there are special rules on how we treat omnibus accounts on our end. But to an investor, what it means is that if you already have a CDSE account and you've ever bought shares, it means you can't sell them through Safaricom, because you see those are 2 different CDS accounts. If you're a new person, and how we view it is like, the same way you can go to your bank and they can give you a custody account and a current account. So it's 2 accounts to achieve, something similar. So it's the same way. So you can have both a ZD account as well as a direct CDS account. For ZD, so they have embedded in-house a registrar service where when dividends are announced, they're passed through to yourselves, right? So that you don't have to worry about all that. And the reason the infrastructure is that way is so that it can be able to make it as seamless as possible for new entrants looking to come into the market. So it's an omnibus account, which I think has been, the regulations have actually been there for quite some time, just that I believe no one had done it. The person who mentioned that they opened their CDS, they made an application to open their CDS account in December. Maybe did you do that through the broker? Because ideally so first of all, sorry to hear that these has taken a bit of time. Maybe what you can do is you can just LinkedIn me or something, we can be able to sort. But ideally, for any other issues such as this, the way to open a CDS account is you open it through your broker, and your broker is usually a liaison to that process. So maybe have you had any feedback you received from them, and if not, you can inform us so that we can keep track of some of these market things that need to be enhanced. But sorry to hear that. I haven't heard of that issue before. I haven't heard of long delays in CDS, but we are here for feedback as well. On cost of listing, I don't have the statistic offhand, but I can say this. The EABL did a bond last year. And I remember reading their prospectus, which is a public information. And by law, you are required to put the cost of the offer in that memorandum. So they raised 16 billion. And I recall their cost of the issuance was 80 million. So you can do the math there and see that's not even 1%. So 80 million to a 16 billion fundraise. We did this similar research for REITs, and we saw that even the most expensive REIT, when they came to market, did not reach the 4% threshold of fundraise, inclusive of all costs. And typically, the 4% is on the higher side. Typically, they can tend to be lower, depending on the structuring, the type of security, and the size. And it has been lost in all this, but there, as much as the Kenya pipeline IPO is the large one happening. In fact, maybe I should have even mentioned this. There's another IPO that's ongoing, although a bit muted, and it's the first dollar listing that will ever happen on the NSE, and it's all right now. Although, in fairness, that IPO it's what is a restricted public offer because it's more restricted to institutional investors, and the minimum threshold is I believe $100,000. No, it's $10,000 to subscribe. But after this closes, we expect another subsequent one to start right away in dollars, and which will have a minimum subscription of $1,000 USD. So you can, and all these publications are online on their sources. Everyone can interrogate how much it costs them to actually get to the IPO stage vis-a-vis how much they're seeking to raise. But usually when we did the analysis, it wasn't above 4%, and it was more closer between the 1 to 2% range.
Okay. I think I can take the three if, Bryan, you finished. So the first one was, where do you find the valuation report? Usually in our approvals, we require the issuer to ensure this valuation report is available at a location which it can be accessed. Of course, in this case, it was government, so I will need to confirm whether it is privatization commission or the transaction advisors. But most likely, if we get through the transaction advisors, we'll tell you where this document is, but it is there and it is available for inspection. There was a question around how we balance our investor protection mandate and also the development mandate. So protection is the key. That's where we focus most of our efforts. When it comes to development, our role is mainly facilitation. So we don't involve ourselves directly, but we do enable those who will do those developments to undertake those developments. However, in any market where we have these two roles, it's very difficult normally to maintain them because one, you are doing protection, and two, you need to work with the market. So it is a very delicate balance. And that's why we have chosen to engage the market in most of the cases before we undertake most of activities, because we must work together. I mean, if it is investor protection, something happened wrong, and people understand why certain actions must be taken, it becomes easier for them, of course, to see the sense why those certain actions have to be taken. But the balance is actually very difficult. Now, the question around regulatory sandbox, we normally don't turn around times because these are new ideas. But when you apply to become one of the testing entities within this regulatory sandbox, first you are given time, up to 1 year. So within 1 year, you should have done most of what you require so that we can see, where is your product ending? If you look at the tool which governs regulatory sandbox, we are allowed to extend this for a further 1 year. So you can do 24 months in the sandbox. But what we know, if you came into the sandbox and you did your testing below 1 year, we will still graduate you through the sandbox. By experience also, we've seen those who have spent 24 months and they still required time to iron out certain things, certain aspects of their innovations before they got out of the sandbox. Again, we have been very facilitative. So the turnaround time, we cannot impose on those who come in the sandbox because they are testing innovations which in certain cases will be very new. And therefore, we only set the time which you must be in there. But I think we, of course, must appreciate there are two phases. There is a first phase of admission into the sandbox, and then there is the, of course, testing of the idea. So admission may be as fast as we go through the criteria which is there for admission. So I perhaps will say we don't have turnaround times, but we have time within which you can stay in the sandbox. Thank you.
Thank you, Bryan and Wycliffe, for that first round. So I'll assign around tokenization of securities. So there's various markets that are considering that or thinking about that. Is that something that the NSE is considering as well? And then there's quite a few questions on the ZD app, which perhaps shows that there's a lot of interest on that or in that. But the one that I'll pose to you is around use of data. And who will have access to that? What kind of data will they have? Sort of a data privacy question. So those will be your three. I'll pose one to you, Wycliffe, around derivatives. Someone's asking about the derivative markets here. That they're mentioning that it's not well marketed and presented, and perhaps it could also lead to an increase in market activity, similar to more developed markets where a lot of the trading is actually around derivatives, less so around the actual underlying direct investments. I think I will pause there. Let me just have one last look to see. There's another question that I guess I'll pose to you, Wycliffe, as well. And this is around algorithmic and quantitative trading. And the question is, what are the regulations, if any, around algorithmic and quantitative trading of equities in Kenya? So we can do that last round and then wrap it up.
Yeah, thanks. And again, we welcome the questions. I've seen there are quite a lot of, I'm trying to respond to some of them on the chat as well, but we welcome, that's why we are here. So on data and access to data for trading, so NSE offers specialized data. So first of all, if you are a trader, you are likely the kind of person who has access to Bloomberg to start with. But that being said, we do offer special considerations to certain interest groups. For instance, and perhaps people may not know this, if you are if you are a student and you seek to get NSE data, particularly to do with research or things like that, all you need is you just need to produce your student identification and you get a 90% discount on data from the NSE. Similarly, we also mentioned about the Sokoplay app the other time that was launched with their support. You can get the data on Sokoplay is real-time data. from the market, and there are also a bit of resources within that Sokopli to help people get started. So that's another route in which you can get, let's say, more affordable data. If you are more interested in real-time data feeds, maybe to feed in your algorithm or whatnot, then that becomes a different conversation, because that real-time data is usually a prized instrument, and the kind of people who tend to request for it are quite sophisticated traders. So that those ones tend to be quite on the expensive side, but the options I've mentioned are, what you can get at a budget-friendly point, let me say that. On tokenization, yes, we are considering it to the extent that we've set up an innovation lab to consider this. I think, as Mr. Shamiah mentioned earlier, there are some regulations that have recently come with the Virtual Asset Service Providers Bill. And as part of that regulation, I believe it's now the mandate of both CMA and CBK to come up with subsequent regulations to support the primary legislation. So legislation around if it's to do with payment platforms, that will be under the mandate of CBK. If it's to do with securities and things, that will be the mandate of CMA. So we are quite keen to see how that goes. Our innovation lab, we are currently testing out one or two matters on that, even as the regulations come into the fold, so that we can be able to, to bring out sensible products that help deepen our capital markets, regardless of the platform that they are on. So that's something we are considering, but nothing, just to say, nothing concrete yet, but we are looking at it quite keenly. Use of data, I think the last one was on ZD, use of data. So the short answer is this. Because the ZD infrastructure is built that way, the whole thinking was, how can this be a seamless entry to market? All the time I've spoken about ZD, you haven't heard me talk about a broker, right? And who is usually the key contact person who has KYC and whatnot. So the way that ZD is structured is similar to how, the ZD was an MMF, there's an MMF with the name ZD, but it has a fund manager in between. And the data here is, the reason it's so KYC light is because in the first instance, Safaricom already has your M-Pesa details, right? Now, on the other side, to do that with capital markets, Safaricom themselves, they are not a broker, right? So what they've done technically is to partner with One Search to open this CDS account, and their responsibilities remain the same. Like the same way you would have opened the CDS account, and the responsibility is your broker to host all these. That's the same arrangement. So with regards to data privacy, I mean, Safaricom already owns your M-Pesa side of things. The others will now be more in charge of the trading side of things. But all of this is in one. You don't have to think about it. You just open, start trading right away. This is one of the things that, maybe it also warrants a special session on its own, because I've seen a couple of queries on that, and maybe that's something we can look to coordinate.
Okay, thanks. And I want to comment on tokenization. I think we have had a lot of interest in the sandbox regulatory. There are a few who started testing there even before we got the legal frameworks and instruments in place. But we believe maybe assets, and then of course we will see some of these products come out. So we know it is because maybe there were no legal provisions that most of us were a bit reluctant, but there are a few already testing in our regulatory sandbox. There was a question around algorithm for equity trading regulations. Usually, we take the view that we can't prescribe. So we allow those who want to have the role of the exchange to have their own systems, algorithms. Our role as regulators, as we approve those systems, is to understand whether the systems will allow the markets to be more efficient. And of course, we ask the person who is acting in the role of the exchange or the owner of the systems to have their own rules. So within those rules is where you'll see details on how those systems will be working. True, for derivatives markets, And I want to admit, I think for a long time, the market wasn't very active. But I want to say, as it is today, we are so pleased. I think if you look at the performance of this market so far, it's picking up. And I think as stakeholders, we have picked ourselves just to discuss, is it marketing? I know NSE has put in place specific mechanisms enhancing those who are dealing in this so that, of course, they can do transaction more in the markets. We've had discussions around whether there are other structures which are required. Of course, when you look at it, the markets which are linked into even what we see in terms of exchanges in securities around the central bank, horizontal repos and all those. So those questions we have gone in. But for me, I think it is, again, two issues. One, the myth that comes with derivatives markets. And I think perhaps more of, sensitization around the role of these markets more could help. And then obviously, from the beginning, I think the market was looking forward for currency-related contracts. I think if we introduce those, we can see a bit of action. But I think it is a product which has taken long, but as we see it now, it seems to be picking. I don't know whether I answered the question, but Bryan,
to support
Bryan, you
you
can
in that response. On derivatives in particular, just some hard statistics since I'm looking at them. So last year, the turnover of derivatives was up year on year by 47%. So the market traded to 50 million worth of derivatives, and that is before we even come to the introduction of options, which again, because they have downside mitigation, they are likely to be absorbed by institutional investors. Interestingly, a lot of the players in our derivatives market have been retail investors. So you can imagine now, once we start having more institutional participation, that turnover can increase. And that increase in turnover, the derivatives market, yes, it has been growing, but the last year is when we started seeing, especially from Q4 onwards, the activity was quite significant, which has still proceeded to be the case. So, that is a space to look out for. And I think we'll be doing a lot more. We are preparing a lot of collateral material to help people understand what it is in the first place.
Thank you, Mr. Shamiah. Thank you, Bryan. I'm hoping that the people who asked the questions have received sufficient answers. Unfortunately, we're out of time despite still having some questions. So what we will do as a team, we'll put together some sort of an FAQ document and send through to the participants with responses, just so that we have all the questions answered. But yeah, I'd like to draw us to a close now. And I'd like to give Bryan and Shamiah a final word before we close. We can start with you, Bryan, and then Mr. Shamiah from the CMA can give us the final word.
Yeah. So thank you for the opportunity, and thank you for allowing us to be here today. I'll go back to the basics of it, and I'll also appeal to, at least to the Kenyans, to patriotism here a bit. So the stock market, the local stock market, indeed, it had its years. We are not leaving out some of the challenges that have been there, liquidity, some elements to do with pricing. But the last 2 years, the delivery has been quite outstanding. And given how macros are looking and given the sentiment that's there, this is not just me speaking it, you can verify how that performance has been. The opportunity is quite significant. If you look at the general population and who has been key players in the capital markets, you'll find that in essence, it seems there's a generation somewhere that was not necessarily connected to the capital markets. But now with the increase in activity, there's an opportunity to, there's a significant opportunity to tap into some of these segments. And that is where now the role, your role comes into play as charter holders, because really your support will be very key. And you're not doing it out of charity in any case. You're supporting both investors and issuers be able to either raise capital or to invest in quality instruments. And because of this huge untapped market, so to say, that is here locally, there's actually quite it's an interesting time where this market can grow. From our perspective, we are quite keen to see innovative products. NSE, there was a report by the World Federation of Exchanges on the variety of products offered at NSE, and NSE was only coming second to Johannesburg in Africa with regards to diversity of products that are traded. The only product JSE had, which we do not have, is the commodities, because of how their market is structured. But all other instruments, derivatives, REITs, equities, bonds, and now even sustainable bonds, because they're becoming a key theme, all those have been listed and are tradable at the exchange. And we count very much on your support to help even your clients who are potential issuers. We are keen to work with yourselves to help develop the market, and hope have a very vibrant capital markets, because actually it leads to proper wealth creation, and also just a better economy for everyone. So I'd appeal to your members for the same.
Mm-hmm.
Thank you. And Bryan, before we get to Wycliffe, all those products on the NSE are available for trading on the ZD app.
Yes. So no, on the ZD app, it started with the equities first. You have to start somewhere. So it only started with equities. There's a plan down the road to introduce derivatives and debt instruments, but it started with ZD, with equities first.
Okay. Thank you. Bwana Shamiah.
No, mine is just to say things and to urge members that we need to leverage your knowledge. So we need to discuss. I think I don't want to repeat what Bryan has said. You have a big role in this. I say again, I envy Uganda because of the work you do there as members. And I think we can still have the same here. Surely, for us, this is a joint effort, We can't do it as regulators, exchanges alone, I think. And the opportunities also to make money. So I guess it's an engagement. For those who want to invest in, especially in the products which are running, as regulators, we assure you, we have looked at most of the questions people are asking. They are hard questions. So, I think we need to make decisions quickly, because these products could be open for a certain time of, for the offer, and the offer will close. So as we debate, and we like the debate, I think we need to look at time. Otherwise, we may allow those who are without, outsiders, to partake of this, and will still complain, because at the end, that is what the result will be like. Otherwise, it has been a good evening, and I hope we can do this more frequently. If you are the elite and you are not very close, then we have a problem, because we need to be more close to those who don't have the knowledge that you have. So we are open to have discussions and see how we work together. Thank you so much.
And we will definitely be knocking on your door, Mr. Shamiah. So folks, there you have it. And with that, I think we have come to the end of our webinar. I'd like to personally and on behalf of the society thank Bryan from the NSE and Mr. Wycliffe Shamiah from the CMA for their time. I know they're both very busy. It's a Friday coming on to 7 o'clock. So thank you for the time. Thank you for your openness, your insights, and your commitment to advancing Kenya's capital markets. I'd also like to thank the participants on the call. I know there's still a good number I can see. For a Friday, I think we're encouraged by the interest and the engagement, and the number of questions shows that as well. So thank you for that. I think the path to rebuilding investor confidence is a collective journey, and your participation today is testament to that. Last but not least, I'd be remiss if I did not thank my CFA Society team for putting this together, as well as the team at the NSC and the CMA for all the planning and the work in the background. And with that, I want to say thank you all and have a good rest of your evening.
Thank you. Thank you so much.
Thank you, everyone.